Hi, welcome back to another episode of With Sonar. I'm Luke Velasca, of course, joined by Kyle Taylor, and we were excited to have another fantastic episode for you today. We've got an incredible update that came out, as long as a lot of changes happening in the freight market. Still seeing some post effects of the storm. But before we get all to that, Kyle, thanks for joining me. How you doing today?
Just glad to be back. I know we have a lot of content that comes out of FreightWaves, and I know every once in a while we get to come on to some of the events, but I'm glad to have With Sonar back. And to what you were just talking about, there's been a ton of changes. It's really impacted a lot of people, and we're just up in the air on what to think about what's going on. So I'm super excited to talk about what we got.
Yeah. No, you're absolutely right. And we've seen there's been a lot of events that have happened to it. FreightWaves has been we finished not long ago the Global Supply Chain Summit, and then there's a lot more events happening as well. So, a lot of content coming to you from FreightWaves. So it's always nice where we can sneak in here. We're obviously doing the show remotely from home today. And I always give the technical folks a challenge every time we do that. But nonetheless, we're here, we're on the air. They can't stop us. Big storm happening right now here in Chattanooga, Tennessee. So fingers crossed we won't lose any power.
Not only
We're
big
doing
storm
this
in
remotely.
Chattanooga, though. Big storm across the United States. We had, I think, Denver was shut down like 2 days ago because of the snow.
Yeah, yeah. I remember actually when I used to broker freight, one of the biggest markets I used to ship out of was Bellingham, Washington. And if you're trying to think, I've never heard of Bellingham, Washington. Probably a reason for it. It's very small. It's about 80 miles north of Seattle.
Hmm.
And so not a lot up there, but I did ship a lot of outbound freight. I was like the one person who did, and it was a lot of long haul freight, and it went a lot of times across the country. It would then go to Ohio, Pennsylvania, New Jersey, Virginia. So you're talking pretty long miles there. And when we used to ship in the wintertime around this time of year, sometimes a little earlier or later, I remember one time, I mean, because there were trucks, they would drive through Montana, and sometimes the roads would get shut down and they would just be sitting there and there was nothing they could do.
Yeah.
So, that was just that's the reality of it. Today it's Denver.
Yeah, no, exactly. Well, let's bring up the chart. Let's see, what's going on in the US. So we're coming off of a big winter storm that has
Mhm.
impacted really all of Texas. And to put it in perspective, Zach Strickland, who's one of our lead guys here, a director of analytics at FreightWaves, he's really he brought it into perspective for me earlier today that Houston had a larger impact. This winter storm had a larger impact on Houston than any of the previous hurricanes that have hit
Yeah.
Houston. So to put that in perspective, that snowstorm that was about a month ago exactly had such a massive impact on the infrastructure that it not only disrupted everyone's day-to-day operation in life, but the freight market in general has just been taken at a headwind here of really volatility and instability. And
Yeah.
to call this out, we're looking at van outbound rejections in blue. Secondary
Yeah.
is actually a new data set that is really coming off of that new product that we're going to go over later in the day. But it is that contracted rate data. So Sonar actually has settled rate data in it currently to be able to see what are contract rates doing. And the reason that's extremely impactful is because not only do we now have, okay, what is the underlying tender activity? What we have the greatest amount of tender activity looking at inbound, outbound volumes, which is supply and demand, and looking at acceptances and rejection of freight, really that carrier sentiment, so that we know what's going to happen before price actually moves. And this is just another way that we're able to see, from a macro level, there's some strong impacts that have been happening over the past couple of weeks.
Yeah. You're absolutely right there. And something we're going to draw attention to, everybody just focus on the blue line there for a minute. You see there kind of around maybe right where 2021 starts. You see that blue line has been dipping pretty much since then. And you get right around there to maybe 10 days into February. So this is, on your screen, we're almost all the way to the right here. You see that dip right there about 10 days into February, that real sharp dip. It's
Right.
the lowest point that blue line goes on the screen, right? That's the storm, right? and that's right before the storm, and that's the effect Texas has on the market. And then right when it starts to go back up, that's pretty much right when shippers start moving freight again. And the reason why it went down is because shippers stopped shipping freight, so there were just less loads to reject, right? So the rejection rate went down. But then as soon as they started shipping freight again in Texas, a lot of those shippers came back online, a week later, 2 weeks later, and it wasn't all at the same time. A big abundance of freight came. We don't have the volume here in front of us, but it was there. And look at that blue line just shoot up to essentially the high of the year, around 27.5%. And that right there is, the highest tender rejections we've seen. And it's still maintaining that level.
Yeah, it's sitting at 25% right now. So that blue line is right at 25% tender rejection. So that's a quarter of of all freight is being rejected right now. And to come off of just a month previously where it was at 18%, 19%, it's such a strong increase that not only is it going to completely disrupt all lanes, you're going to see rate per miles significantly higher than what we've seen. And so this is
Yeah.
on it looks like it goes back to about the end of last August. And so what this is showing us is that on that red line, that VC rate per mile, which is looking at van contracted rates on a national average, it's higher right now than it has been all year. And so
Yeah.
this is having such a strong impact. And most shippers just started going live with their new awards on their route guides. So it's like,
Yeah.
oh great, finally I could wash my hands. I'm finally done with that RFP. Oh crap, some snow hit, and now look what's happening. Now we're going to have
Yeah.
to really go back to the spot market.
Well, what you also have to remember too is you're absolutely right. So we saw that little peak right there where 2020 and 2021 meet, where contract rates started to go up. Then they started to come down a little bit, but part of the reason why they're going back up, you're absolutely right. It is correlating with the storm, right? Because a lot of times contract rates are negotiated where spot rates are at that time or have been moving, right? They do correlate a little bit, right? And in addition to that, you also have a lot of RFPs and bids that are happening right now. A lot of them happen in Q1 and are starting to go live. A lot still haven't gone live. So as spot rates continue to go up, which we know they are because tender rejections are up, right? And spot rates do follow tender rejections. So as that happens, van rates, in this case, van rates, contract rates are continuing to be renegotiated, and they're starting to come online again. And that's where you see that orange line taking another leg up, if you will, for the contract rate. So I think 2021, if you're in contract freight, assuming you're a broker or a carrier, it's going to be a good year. From a shipper's perspective, maybe not so much, but but shippers will hopefully be able to manage capacity a little bit better, and at least their routing costs. So even if they do have to pay a little bit of a premium this year, hopefully they'll be able to settle through some of that capacity until capacity does reach up to where volume is, or those two meet a little bit better. Then we'll start to see maybe rates come back down a little bit, but we're not there yet. But anyway, great chart, great state of the freight market there. Um, so anyways, Kyle, what's the tell me a little bit about, we've got some other charts here to pull up here, or some maps rather, that I think show a really good picture of where the market is, probably more recently, a little bit less of like a long-term view. Uh
Mhm.
what do we have there?
Yeah, so what we're going to really start to dive into is this week. So additionally, like what we just brought up, Denver is getting impacted, and really a snowstorm coming across the industry is being impacted, and so we're seeing a lot less outbound volumes being sent out across the nation. Really interesting piece about this is that if you would have looked at this yesterday, this would have been telling you that there was a ton of freight moving out of the markets. And so what we're seeing is that weather, as you can see, the red, the blue, and the pink, we saw that snowstorm come across that the Chicagoland area, that northern Ohio, the Cincinnati kind of area. Everything was really sort of shutting down, and so that's having a real strain on route guides again. And so we're
Yeah.
continuing to get hit with this volatility one after another. And once again, I know we seem to always kind of reiterate this because Luke, you and I talk about it all the time. This is something that if you don't have anything to let you know what's going on, if you're looking back at just a rate, it's not going to give you anything about what's going on right now. And so this is for everyone online. This is updated daily, and this is really looking at capacity. So, red's going to be a classic backhaul style of market. There's more inbound than outbound, and blue's going to be your head hauls. So you got more outbound freight than inbound. So really, just not a lot of opportunities there. Really, if you kind of ironic, I guess you can say in a sense, Luke, that only the port cities seem to be the ones surging with freight right now.
Yeah, and then there's Dallas.
Right? No, exactly.
Yeah.
Dallas has been by the wayside for
But
a
I
couple of weeks.
wouldn't, if you're a truck, I wouldn't get too excited about Dallas because you see there's red all around it. There's red in Houston. There's red in Fort Worth. There's red there in Austin, Texas, San Antonio, Texas, right? Everywhere around it, meaning all those trucks in those areas that can't get loads are probably deadheading over to Dallas to suck up some of that extra load imbalance over there. So versus LA, look blue. Looks like Elizabeth, New Jersey up there is blue as well. Harrisburg, Pennsylvania, Chicago. Not much of a surprise there. Is that Kansas? Is that the Kansas City area I see there, kind of in the middle of the map, light
Yeah.
blue?
No, exactly, and that's kind of normal. I mean, you gotta, what is normalcy for the United States and those center states. So really going from your Cedar Rapids all the way down to
Mhm.
the Mississippi, whatever you want to. I think Zach was calling it the Louisiana Purchase area, but. That area is always seems to have volatility. That's always where people are wanting to go, but it's just being exacerbated right now. So there is just
Right.
it's just continuing. I think markets there are having close to 50% tender rejection percentages.
Right.
And that's just not sustainable. And those are the areas where we're setting up. I mean, you got Memphis right in the middle. So you got warehouses all around there that are just being affected. And so no one's having a lot of fun right now. I mean, if you're driving through snow, that's brutal. If you're having to negotiate freight and all of a sudden your trucks are having to stop, well, that's worse. And then on the receiving end, your service levels are starting to drop because look, now you can't really even get freight into your warehouses. So it's going to continue
Yeah.
to just get hit. And Nico,
Yeah.
my friend, Nico Brown wants one of these shirts. Tell him they're 2 of 2. You got a Luke shirt and a Kyle shirt. These are
Yeah.
exclusive, my man.
Exclusive. Nico, I don't know if you can see here, but our logos are actually a little bit different. My with Sonar logo right here, the top is a little bit smaller than Kyle's. We got them made at two different times. They're both prototypes. I got the smaller prototype, apparently. I don't know what Kyle's trying to tell me here, but two of a kind or one of two. I don't know how
Clearly.
I'm supposed to say that. But anyways, maybe maybe we can make something work. Maybe we have a competition or something and we give one away. Maybe we need to do a giveaway. We make a third. The
No, we
third
definitely
one.
need to. I mean, it's got to be. So we
Nico,
got to
you
give it
got
to
any
the people.
suggestions for us? Nico, what kind of giveaway should we do? You got any ideas for us from a competition perspective? We'll give you a little time to write a response.
For
I
sure.
just put him on the spot. I just put Nico on the spot there. Whoops. But
No, for sure. But
we're
to
always
the
open
next,
to
so
ideas.
what do we got coming down the pipe? So we've been kind of trickling a lot of information to our community. Everyone's always talking a little bit of friendly trash to us that oh well, Sonar, you don't really have rates. You can't you don't provide me much value because I don't know the rate per mile. And
People
so
still say that. We've had rates for like over a year.
yeah, but sorry, Luke, that's just they're not my rates. Everyone's always like, what's your rate? What's my rate? I mean, what's this gonna help? But
Well, the only person who has your rates is you, so I can't imagine it would be your rates. Um,
exactly. But
I'm teasing. I'm playing. I'm being mean to Kyle here. You're right, Kyle. You're absolutely correct. But we do have something good in the pipeline here. I'm not going to steal your thunder though. If you had like, if you're about to like drop the mic on the folks here watching,
yeah, we're gonna
but
bring
I
it in
can if
real
you want me
close,
to.
real sensual to the crowd. No, but so what we've been really working on here has been okay. How can we take things one step further? I mean, that's probably the biggest impact that FreightWaves has on the community in the transportation market is that we're never just like okay with where we're at. We don't want to just continue to be who we were yesterday. We want to continue to just break down what we have to offer and what things that we can, really expose so that people can make the best decisions. And so that's where supply chain intelligence is now coming into play. Have
Mhm.
over $80 billion worth of settled rate data, partnered with a pretty large financial institution in order to collect these, which gives us access to over 300.
Specifically contract rate
Right.
data, and that's very important, which we'll get to in a minute.
No, it's exactly right. So, but we are finally getting into the settled rate side of the business, and
Mhm.
that's only going to continue to enhance that tender data.
Yeah. And I want to make a point here too. Like a lot of folks are like, listen, like, hey, there's a lot of settled rate data out there. Like, great, nothing special about that. It's we're not getting we're not we're not getting into the settled rate data specifically for contract rates because it's better or worse. We're getting into it because we have the market analytics side, the tender data. Nobody has the tender data to the level that we do. It's not even close. We have that. Now, we also have our algorithm or FreightWave scientific rates that are spot rates that we also come up with that forecast as well. Now let's add the settle rate data in there. So you now have the three pieces, right? You have the market analytics, which is the why behind the rate. You have the
Mhm.
FreightWave scientific driven rates, which are sort of computer generated rates based on where the market is. And then you have actual paid rates between shippers and carriers for their contract rates, right? So those three there are incredibly important because, again, like Kyle, we've said it so many times, a rate is nothing more. All it tells you is what somebody got paid to move a load. That's all it tells you. It tells you
Right.
nothing about capacity. It tells you nothing about supply and demand. It tells you nothing about service level, right? All it
Mhm.
tells you is somebody got paid this amount. That does not guarantee they're going to continue to get paid that. Doesn't mean that they were overpaid. Doesn't tell you if they were underpaid. It tells you nothing. All it tells you is somebody got paid this amount of money, and that's it, right? Doesn't tell you if they got a good deal or a bad deal. And that's where we have all those other tools, right? We have all the tools to tell you what the market analytics are. We have the tools to tell you whether you should be asking for more or whether you should be negotiating down, right? Whether you should avoid certain lanes or not. Now we're adding in kind of the result piece of all that. So it's full circle now. It's full circle now. And I love that we're doing it with contract rates, to be honest, because that's 80% of the market. 80% of freight is moved via contract, and most of our tender data is contract anyway. So the fact is, you're enriching 80% of the market now, and the market really needs more visibility on the contract side of things. So I'm really excited about it. I know you've had some conversations with folks already about it. How have those gone?
Yeah, well, let's just go ahead and throw the page up for everyone so that we can kind of walk through kind of
Awesome.
how exactly people use this, what the plan is, and where the impact is going to be. And so,
Hmm.
to what Luke just outlined, we have the largest amount of contracted, pretty much routing guide information. And then from there, we've now ingrained over $80 billion worth of settled rates. And so, okay, that's awesome. You have a ton of data on top of a ton of rate data. What's that really going to do? And so the impact that this has is that now shippers and logistics professionals can come in here and identify exactly where they are paying compared to the market. So
Yep.
how do my rates compare to the market? And really, you remember this is really focused on contracted rates. So we're looking at, okay, if I'm doing an annual RFP, where am I doing well and where am I doing poorly? Just trying to answer that simple question, and then taking that and then saying, okay, now I'm doing extremely well. Okay, I'm doing really good against the market. What's next? That's when we take it into the peer groups. So we break it up by the NAICS codes so that we can identify the exact peer group, so that we can see how do others like you pay or getting charged on a lane. Because it doesn't matter if you're charging, if you're getting $1.50 because you're doing water bottles, it's going to be drastically different than if you're doing rolls of toilet paper. And so we
Right.
wanted to identify that so that you know exactly how you're comparing, and we're doing apples to apples, not cherries to watermelons.
And that's a great point. And let's just walk through an example, right? Like let's say if I'm Ford, right? I want to compare my rates. I don't really care what the market's doing. It's maybe nice as a benchmark, right? Or something to talk to. But I shouldn't be comparing my rates to Amazon or my rates to Home Depot, to GM or Chrysler, right? I want to compare myself to the other auto manufacturers because that is going to tell a more complete story as to how I'm performing relative to my other cohorts, right?
Hmm.
And how competitive I am. Now, another step to that, and this is how we can go a step further. And there was a lot on that last screen. We're not going to go through it all right here. That was just a quick snapshot of it. But you could also it doesn't stop there. It doesn't even stop at the peer group pricing. It goes further than that, and you can now see service level on there. So let's say your peer group, let's say I'm Ford, right? And I'm paying $2 a mile for a certain load. And my peers, right, the other auto manufacturers, which have selected, can say they're paying $1.85 a mile. Well, it looks like I'm overpaying by a lot, by like 7.5%. Now I can go over to the service level and I can see, well, what service level are they getting at that $1.85? It's a little hard to see, but some of those scores that you see in the top right corner there, those do represent the service levels. Not going to
Hmm.
define them too much here right now, but the point is you have the ability to see what kind of service they're getting. First off, how often, what percent of the time are they actually getting their loads accepted at that rate? How often do they not get that accepted and they have to pay a higher contract rate through the routing guide or even have to go to the spot market to get it
Right.
covered, right? How often, what's the volatility on there, right? How often are they getting price increases? That sort of thing. So we have the ability to see that and dissect that over time, which is where this data gets so rich, right? Because we have that analytics, we have the computer science to differentiate between all the different sectors of what's affecting pricing. And that's where this gets really exciting. Again, a rate is just a rate. It's just simply to tell you where you're at. Now we're telling you what's happening at different levels of those rates, which is very exciting.
Yeah, and there's countless different areas. So SCI is going to be its own product suite. It's going to be
Hmm.
something that has really a ton of olive leaves that or olive branches that come off of it in order to just continue to build on that contracted settled rate data. Eventually, we're going to be getting more into the forecasting aspects of things, and then into some other data sets. And really, it's only limited by the data that some of our customers provide us. And so that's where I'm really excited about this, because when it comes down to it, what shippers really need is not just a rate. They need a rate and direction. They need a
Hmm.
rate and understanding or sentiment. And that's what no one else has been able to provide is, okay, here's what the rate is. Now, why is that the rate? Why am I actually overpaying compared to the market? What could be some areas where maybe I just don't understand? And that's where that tender data comes into play,
Hmm.
where now you can see, okay, I'm paying 15 cents higher than my peer group. Okay, well, let me check the lane score. That lane score just
Yeah.
to the right of the pricing is actually going to describe to you how attractive that is for a shipper. So higher that score is, the more negotiating leverage shippers have. Lower that score is, the more negotiating leverage the shipper or the carriers have. And so
Right.
that is just a really dissected score so that you can just understand load balance at the origin and destination. And that's just one score that we've just outlined, Luke. I mean, there's like a million
Yeah.
things that we can kind of break down from here.
Yeah. No, you're absolutely right. And that's what's neat too is you've all of a sudden opened up a whole different door, right? For example, right? Like let's say like a lot of things that shippers have to deal with is when things get disruptive in their market, they have a lot of them have a lot of shareholders they have to report to. They report to the executive team at that company, and then they have to report to their shareholders, and now they have to tell them why their profits are lower this year. It's because they've spent more on transportation. And a lot of times for shippers it's just, oh well, the whole market's up, or there's a driver shortage, or
Mm-hmm.
well, everybody's paying more, or I can't get
Inflation,
anybody to
Luke.
accept my load. Exactly, right? Anything. And that's all of that stuff, it's not helpful. It's just circumstantial. It doesn't really eat up. Now all of a sudden, yeah, we've got the rates, but we also have the market intelligence. So now all of a sudden, you have the ability to tell somebody, like, listen, we're paying 15 cents or more on this lane. And the executive probably wouldn't care about a specific lane, but we'll use it as an example. We're paying more on this lane here. But the reason why is because our service level is this much higher than what everybody else is experiencing when they pay that. And reason why we don't want to pay that little is because when our service drops that little, it causes delays in our products, which actually costs us this much more money. So you have the ability now to distinguish those things and answer those questions and have that level of direction in the supply chain. Because some shippers, they're willing to pay a little bit more, but they need that service level to be very high along with it. And
Right.
now they'll have the ability to distinguish, okay, what are my peers doing? What are they experiencing at different price points? Great. They've done all the experimenting for us. Let's go do it now and be successful in round one.
Yeah.
So you
No,
have that, you
and
have
then
that ability.
even to ask, these are things that even some of our own customers that are using SCI today are asking, which are, okay, if I were to drop my service percentages down 2%, or if I were to drop my primary tender acceptances down, how is that going to be reflected on the rate? If I just drop 1% on my primary tender acceptance overall, is that give me the potential to save a couple $100,000, or what is the potential there? And so that's where this becomes a very creative tool, because now you can start playing with these different data sets and start understanding them in a different way, and ask these questions. Okay, but what if I did this? I'm going to create a DC out of this network, and what is that going to do to my entire network as a whole, that now that we're creating this new DC? And so
Yeah.
there's really a ton of different ways that we can look at this, and I'm super excited to see where it goes.
You're absolutely correct, Kyle. And also, by the way, did Nico ever get back to us on a shirt giveaway?
Oh, Nico's been back. So Nico actually said that we should give away a shirt or a jacket to the person in chat who is tagged FreightWaves the most on LinkedIn. He said he's got 3 today.
It's got three. Okay. That's not a bad idea. I like it. We'll have to figure out a way to count that up.
Yeah,
We'll
no,
see if we can.
yeah,
We'll get back to you. But I like it. At least point. Nico already gets a couple points for creativity, if nothing else.
right.
So Nico's a little ahead of the game. By the way, also, we've been having this conversation. I know we're getting close here to the end of time, but something too is, this tool very, very valuable for shippers, no doubt about it. And we have a lot of shippers who want it and are getting it. But doesn't mean brokers can't have it. Doesn't mean carriers can't have it. If there's interest there and you want to see what it is and be able to leverage it from the other side of the scale, right? And see what everybody else is charging their shippers in different peer groups, right? We can have that conversation. So if this is something you're interested in and you want to see more about, let us know. Leave a comment down below. Myself or Kyle, you can tag one of us or both of us. Tag myself because I'm better than Kyle. Just kidding. But I had to slip it in. It was my
Had
moment.
to,
It's my
had
moment of
to.
fame. I'm sorry. I apologize, folks. That wasn't nice. But seriously, if you do want to see more, let us know. We'll get you taken care of. We'll show you, do an in-depth version of it, and just leave us a comment below, or you can shoot us a DM. That works
Awesome.
too.
Well, look, we got a 3PL summit coming up. What do you got for us on that?
I'll tell you right now, we got the one and the only Kyle Littner joining us.
Yes, sir.
So once again, I'm in the hole here. Two Kyles versus Luke. But no, the 3PL Summit, man, it's going to be great. It's going to be great. I mean, obviously, you've got all the smartest people in the industry that are going to be there, and that's really exciting. And on top of that, for this show, we're going to have Kyle Littner here, who's one of the smartest minds in transportation and logistics from like a data perspective. Super pumped to have him. And then, hey, in November, we've got F3. There's a bunch of stuff until November, but I can't keep having my eyes set on F3. It's going to be the
Yep.
biggest freight tech event in the history of freight in Chattanooga, Tennessee. It'll be in person, which is going to be very
That's going
exciting.
to be
We're
awesome.
almost here
Can't
at the
wait.
end of time. I'm getting the flashing warnings here from the technical team. We got like 15 seconds left or something, so I'm supposed to wrap this up. But folks, for joining. Otherwise, I'd let you talk again, Kyle, but I can't. So, anyways,
Ah,
no, we'll see you again next week, Wednesday, live, 4 p.m. Have a fantastic rest of your day, and we'll see you next week.